anybody who is interested in Web3, interested in emerging talent markets, and then also just folks who are looking to do talent in highly competitive markets, because that's really what this is. And there's a lot of innovation happening in terms of compensation, in terms of actual kind of work strategies and workforce planning. And so I think there's going to be a lot of interesting insights that surface that are relevant to other fields as well. But Elliott, thank you so much for joining us. Do you mind giving us 2-second background and kind of like what you're doing in this world of Web3 talent strategy?
Yeah, sounds good. So, when I graduated from college, I just got into the startup game, and I worked in a few different material science oriented startup companies in commercial roles, doing marketing, business development, sales, that type of work. And the last company I did that at was in Boston. It was a company called Voxelate, which was a 3D printing company. And as I was winding out of that company, I wanted to shift my career more into the software business and look at more of growth stage oriented companies. And at the time, this was in 2016 or so, Wayfair was a kind of a mid-sized company. It was maybe about 1,500, 2,000 employees. And I got a job at Wayfair working in the recruiting department, and just ended up recruiting a bunch of data scientists and a bunch of warehouse workers and a bunch of call center workers and a bunch of operations people, and just got like an amazing seat at one of the fastest growing companies in Boston that, was hiring tons of people. When I left Wayfair, it was almost a 25,000 person company, and just really got a lot of exposure to recruiting. And that was like really where I got more involved in becoming like a recruiting professional. I left Wayfair to go work at ClearStreet, which is a fintech company. And we built that company up. And then everything was just getting so exciting in the Web3 space. And I just decided that I wanted to get more involved in it. I wanted to run my own business. I have 2 kids. My big girl is named Ella, and she's 2.5. And I have another younger girl, and I just wanted to take more freedom over my life. So I thought, okay, I think the market is sufficiently set up that I can get involved in the Web3 space as a talent consultant and as an executive search professional. So I started this company a few months ago and have dived in, and it's been quite a journey in the Web3 world. I've been having a lot of fun, and happy to share with you, what it's like over there.
Awesome. And I know that your thesis is we're going to have a new internet in 10 to 15 years, and Web3 is just sort of going to eat everything. For somebody who maybe doesn't really know too much about what's going on there, can you give us a succinct version of what is Web3 and kind of what are, the things that are being built in that ecosystem?
Yeah, sure. I mean, so I'll just kind of restate. This is like what Chris Dixon says. So for those of you guys who don't know, Chris Dixon is a partner at Andreessen Horowitz, which is one of the top crypto VC firms. And he's an active podcast guy. So if you just Google Chris Dixon, you can find all kinds of podcasts from him where he explains all this stuff in a really crisp way. So for folks who are interested in an intro into Web3, I would highly recommend checking out Chris Dixon. But essentially what he talks about is that the internet economy has happened in 3 phases: Web 1, Web 2, and Web 3. So Web 1 was the beginning of the internet. And this is like where Netscape was like the really big company. And the whole thing around the internet was that there were these websites, which were basically static websites, which were made by publishers. And then there were users who would go and they would just read those static websites. And that was kind of all that you could really do. And that was the internet for about a decade. And then Web 2 started, call it around 2006-ish. And I would say, the most famous Web 2 company is Facebook. And the thing that happened in Web 2 was that the users started to create the content. And so that when you went on the internet, not only were you looking at what was on the internet, you were also creating things that were on the internet. And these centralized platforms made it very easy for people to become creators. Now, the thing about Facebook is that Facebook owns Facebook. And if you have a profile page on Facebook, Facebook owns your profile page. YouTube owns your YouTube channel. And one of the things that Web3 is now doing is it's taking the read-write capabilities that became popularized in Web2, and it's porting them into this new framework, which is Web3. But in Web3, you, the user, own the digital assets that are being created. And so what that is going to happen is that we're going to shift into an internet economy where, rather than having Google and Facebook and Amazon and all these like super gigantic technology companies who take most of the value that's being created and add that to their market caps, what will happen is that wealth is going to be shared more broadly across the user base. And that's the big story of Web3. And if you look at any basic use case for how you use the internet today, over the next 10 or 15 years, a Web3 version of that is going to get created. And because of how the economic incentives are set up, the users are going to move over and start using it. And, you know, the internet is going to just become a much more open, much more participatory, much more democratic, and also a more broadly capitalistic type of platform that many, many, many more people are going to be able to participate in the ownership of these systems. And that's what Web3 is in a nutshell.
Very interesting. And I think one of the cool things, as you sort of outlined, is the incentive of a user is to move to this new paradigm because you can actually participate in the upside. And it's sort of a recursive sort of formula where somebody moving over makes that thing more valuable and therefore makes it more attractive for more people to move over. And so you get these shifts that happen really, really quickly. And I think you've seen, whether it's, you know, NFTs or different cryptocurrencies, people kind of evangelizing them and adopting them very quickly. What are some of the like companies that you've perhaps worked with? Like, what are they kind of working on? What are some of these employers actually doing in this space?
Yeah. So in the Web3 industry, I mean, there are all kinds of categories. And, you know, I wouldn't pretend to be like the super expert on knowing all this. You know, I myself have just been getting into this for the last few months. And, you know, I've been focused a lot more of my time on delivering immediate value to the clients I work with. And the immediate thing they really need is advice on their org structure, planning out their comp, literally getting people hired into the company. So, you know, I've been reasonably tactical over the last several months as I've been working on this. And so I haven't like set back and like zoomed out and taken the VC lens on the whole space. But at a very high level, if you look at the economy, I would say that there's one segment of it, which is like all the cryptocurrencies. And all those different cryptocurrencies, they have different angles that they're looking at, different payment networks that they're creating, different value props for why they exist. And, you know, if you go on like CoinGecko and like take a look at like all the coins, like you'll see there's, you know, like 1,000+ coins that are out there that have different purposes and different utility. So I would say, you know, the cryptocurrency is, you know, the first application that came out with Bitcoin, and like a major one where there's still a lot of activity. Now, one of the things that's been changing over the last few years is that there's more applications that are now being created. So like as an example, NFTs as a category that has gotten a lot of attention in the last year. And in NFT, there's a bunch of different categories with NFTs. So the one that a lot of people really know about is the profile pic category. This is like what CryptoPunks is. This is what Bored Apes is. And these are, you know, essentially digital social clubs that you get through purchasing these NFTs. And the NFTs all have secondary markets. OpenSea is the biggest marketplace where people transact in secondary markets for these things. And this is all around basically owning your digital identity on the web. But there are other NFT applications that are a little less known about. So one of them is music. So right now, the dominant way that people consume music is through streaming. And, you know, the big players in streaming are Spotify, Apple Music, Amazon Music. So if you look at Spotify and you look at how much money Spotify makes by streaming a song, and then how much of that money they share with the artist, it's a really, really, really small number. Artists don't really make that much money streaming on Spotify. You've got to be big like Jay-Z for that to really make you any significant money. So if you're a small artist that's trying to get off the ground, it's really hard to break through on Spotify. So there are these new music apps that are coming out that are built on an NFT technology, where an artist can go out, they can launch an NFT project, which their audience can invest in. Then the audience own a portion of the music that the artist is creating. And then as that artist gets more famous and gets more listeners, then the value of that underlying token goes up. And so the artist and the audience are benefiting economically from the distribution of the culture. And the record labels and all the intermediaries that have historically dominated the music industry and taken most of the money get completely wiped out. All of the mechanics for how this work, I can't really explain, but what I know is that there's a lot of enthusiasm around it. There's a ton of startups that are looking at this particular idea. And I think it's very likely that in 10 or 15 years from today, artists are going to reclaim ownership over their IP, and they're going to be sharing that ownership with their audience. And this is going to be a completely new thing that's never really existed before.
It's really interesting. And I think the enthusiasm is undeniable. The amount of venture capital dollars, the number of tier one funds that are devoting 9-figure sums just to crypto per fund cycle is, there's something happening there. Right. Without a doubt, despite the Luna stuff and whatever, all these other, NBA Top Shots, etc. What are so I'm an employer in the space. I'm trying to build out my org. What are the challenges here? Am I looking for specific skill sets that very few people have because different technologies have only been around for a certain amount of time? Is it that there's scarcity just because it's hard to recruit people in general? What are some of the challenges, and what are the personas that people are most in demand in terms of hiring?
Yeah. So I think in Web3 recruiting, there's some really strong assets that are really favorable. And then there are some challenges that I think are unique. So one of the challenges is that being in the crypto economy has been quite fringe for quite some time. And it's only been in the last year, as all the asset prices have gotten totally pumped up, the crypto asset prices got crazy pumped. Yeah. So there were just a lot of people working in Web 2 that were having serious FOMO because they were looking at their friends who were there was the crazy person that worked at Facebook 3 years ago and said, you know what, Zuckerberg sucks, Facebook sucks, I don't want to work here. I'm going to go work at this random thing that no one's ever heard of. Right. And everyone thought that was the crazy person on the team that no one really liked or had any respect for. This guy goes and ends up working at some type of DeFi company, before they had issued a token. He, maybe got 1 or 2% of the token allocation. And then the thing just suddenly became Uniswap. And now you just have an average software engineer who was, making $400K total comp at Facebook, went and worked at a DeFi protocol for 3 years during, the hottest time that DeFi was completely blowing up, got liquid on tokens, sold a bunch off, and now he has a $10 or $15 million net worth. And then you have all these people who have pretty high incomes, but they also have high expenses. They don't have particularly high net worths, and they see all their friends who basically just got stupid lucky on their timing. And then FOMO is a real thing. And then you have all these people who want to move in. But they're not moving in because they really care about the mission. They're not moving in because they care about the story. They're just moving in because they want money. And generally speaking, people who are just purely motivated by greed, are not going to do the best work. So one of the problems that a lot of the DeFi and NFT and crypto founders have is that you have to bring Web 2 people in because as the market grows, there's just not enough experienced people who've been in it. So new entrants need to come in. But a lot of the new entrants are not really motivated for the right reasons. And you have to kind of screen those people out, which can be a challenge. So I would say that's one challenge. The second is that when you really look at the true believers of the crypto economy, they tend to be really globally distributed because it's always been a really small community. And this thing really started to get really popular during COVID. So everybody was remote anyway. So a lot of these teams have gotten built in this sort of default remote way that's been unconstrained by geography. But as the companies start to get more successful, they start to have 30, 40, 50 employees. But those 50 employees are distributed across 18 or 19 different countries, across a dozen different time zones. So you'll have people working in Taiwan, Singapore, China, Eastern Europe, Western Europe, the East Coast of the United States, the West Coast of Canada, in Brazil, and Hawaii. And it's actually really hard to organize 40 people that are totally distributed across the world. And, not all companies are GitLab that, have built these like super codified plans around how to run a disciplined remote organization. GitLab, I think, is really like a very small number of companies that have really figured out how to operate default remote in a productive way. So I think one of the challenges a lot of these remote Web3 companies have is they have these like wildly distributed teams that are also really small. And so the coordination between you actually need to coordinate a lot more when you're a small team, especially when you don't necessarily have product market fit. There's a lot of creative work that needs to get done. And a lot of that really is best done synchronously. So I think one of the problems that a lot of these companies have is managing asynchronous work in a highly creative environment with a very small team distributed across every time zone in the world. It's really a difficult challenge, and like one that, I don't think is even largely solved. It's just like largely observed and being felt right now. And then, the other problem that I think is unique to this space is that because there's so much money sloshing around in the industry, that attracts a lot of people who have various scams. So like even in the recruiting game, there's scams where there was this journalist who reached out to me last week because there's this North Korean scam that I've experienced. So there's some like spy agency in North Korea who has gotten together a group of North Korean spies. They interview for jobs at Web3 companies to basically get hired. And then I think their plan is to infiltrate the company and try to steal its money and get a free paycheck while they're at it. And so I would say 20% of the candidates that come through our funnel for recruiter screens are these North Korean scammers. And so it's so crazy because like I've literally interviewed these people myself, and like you're on the phone with them and they will usually not turn their camera on. Then you ask them to turn their camera on, then they do. And then they're in this like crazy room that's like all white with like fluorescent lights like beaming down on them. And then you can sort of see in the background, you can like hear like the sound of other people like talking in the background, almost like when a telemarketer calls you from India or something and you hear that chatter in the background, like you sort of hear that chatter. The people really don't speak very good English. And then they'll often pretend that they live, like you'll say, oh, where do you live? And they'll say, I live in Bay Area. And you'll say, oh yeah, I used to live in the Bay Area. Like, what town do you live in? But their English is not so good that they don't know what town do you live in. They don't know what that means, but they generally know that you're talking about location. And then they say, I live in the Bay Area. You're like, yes, I understand the Bay Area. The Bay Area is comprised of many towns. There's San Mateo, there's Palo Alto, there's Menlo Park. Which one of those towns do you live in? I live in the Bay Area. And sometimes they actually have scripts. So you can see, like, while you're talking to them, that they'll like be looking at the screen and then will start reading, okay, the town is San Mateo. I went there after graduating from Stanford. And it's like, there's no way this guy graduated from Stanford. Like,
right.
It's just like no possibility.
20% is a huge number.
It is extremely common. I cannot believe how many people there are that do this.
So why scam the Web3 companies? Like, why is that a useful versus trying to go work at some other? Is it because the systems aren't there, or?
So most of the Web3 companies don't have a guy like me. This is the whole reason I run this business, right? So most Web3 companies don't have a guy like me who's like running the talent department for the company. So, like I just set up, what in any normal Web2 company would just be like a normal recruiting function, right? Mm-hmm. Where you have like set interviews, set competencies that you test for. The first interview, you do this, the second interview, you do that. Then you do a coding test. If they pass the coding test, you do, a final round interview of a panel of 3 people. Then you make a decision. Then you run a debrief. After the debrief, you make an offer, right? Like just sort of the standard best practices of recruiting. I think there are many, many Web3 companies that just haven't gotten around to building those functions. So what you'll have is a brilliant founder who's very busy doing a lot of stuff, hasn't really built out everything that they need to really operate the company. And so I think that there are some companies where these people kind of skate through. Because the crazy thing is if you send these people the coding test, they will pass the coding test. So then there are some number of people who will say, oh, well, they passed the coding test. Maybe their English isn't that fluent. It's probably fine. We're an inclusive organization. We're global. We hire people everywhere. We really want to evaluate people based on the merits of their work, not on their resume or what school they graduated from or their pedigree. So we'll just hire the person and we'll see how it goes. Right.
And then are they able to like put something in the code that allows people to steal tokens, or like what's sort of the end game here with this scam?
I really don't know. I mean, I actually broke the story on the scam because I started talking to other recruiters and everyone else was complaining about this because all of us were talking to these people. And I was like, we should just like call a journalist and like make this a story so that like we can make just raise visibility on this and like route these people out. Right. So I'm actually like running a PR campaign on these people right now because I think with enough visibility, it'll just eventually wash out as more companies are just like aware of it. Every now and then, like I actually have a list of these fake people. And like anytime I see them like change their job on LinkedIn, I'll send a message to the CEO and say, hey, just an FYI, like I met the person behind this account and it's like one of the scammers. So I'm not sure if you actually hired the person or didn't hire the person, but if you did, you should probably take a look into it. Yeah. And I send like 1 or 2 of those out a week.
Wow, that's hilarious.
Yeah.
One of the other, I think most interesting aspects of this Web3 talent stuff is a lot of the compensation is tokens. It's not equity, it's tokens. Can you talk a little bit about how that works and how it's different from equity?
Yeah. So generally speaking, when you're working at a more traditional venture capital backed tech company, the way they pay you is either incentive stock options or RSUs. Kind of depends on the maturity of the company and how what the value of their stock is. The thing is that for that stock to get liquid, the company either has to be purchased or it has to file for an IPO. And one of the big themes in the tech market over the last several years has been that venture-backed companies have been staying private longer and longer and longer. And they've been getting bigger and bigger and bigger private. And the threshold for when they either want to sell or do an IPO has been getting higher and higher and higher. So what that means is that there are all these employees that are sitting on, a lot of paper stock, but they can't get liquid on it. Now, there have been some innovations where they've created secondary markets. And if there's like another fundraising round, sometimes the founders will let certain employees like sell some of their stock on a secondary exchange, but usually you have to sell it at some type of discount. And so there has been some innovation in making the stock more liquid, but by and large, it's generally illiquid. And you're also exposed to market risk because, in the time that you're waiting for the company to eventually go public, just like we've seen in the last month, the whole market could change the price of all the companies. And all of a sudden, instead of the stock being worth a ton for you, maybe even under the liquidation preference of the company, and basically it's worth 0 for you. That's the other thing about a lot of, especially early stage stock, is as companies raise more money and as preferred equity does more rounds, they very commonly will put on liquidation preferences. So that means that what the company needs to sell for common shareholders to even start to get any money is a pretty high watermark. Mm-hmm. So what happens is you just end up with a lot of employees in these companies that either don't get liquid or take a very long time to get liquid, or when they get liquid, the stock is not worth nearly as much as they had hoped when they had joined the company many years before. The thing about tokens in the Web3 space is that the tokens get liquid a lot faster. And the lockup periods on tokens are not as severe as the lockup periods that you'll see on company stock. And so
what's average lockup look like for a token?
Generally 1 year.
Okay.
But it's all over the board. And there's really not a lot of standardization in how different protocols are doing it. So it's all over the map. There's some that don't have lockups at all. There are others that have 2-year lockups. So,
and as an employee, would my lockup be different than somebody who got the token through participating in the project or buying it on a secondary market?
again, there's a lot of heterogeneity on that, but oftentimes the employee base have the same token rights that the investors have. So if you look at like Paradigm or Andreessen Horowitz or any of these really large funds that invest in these projects, largely they're investing in the equity of the company to have pro rata rights to have access to the tokens. And like where value accrues in the Web3 economy is value generally moves to the token rather than to the C Corp, which is different than a traditional company. A traditional company, it's the C Corp that captures all the value. In Web3, the C Corp is often a pass-through to the token. And then oftentimes, but not all the time, the rights that the investors have in the tokens are the same rights that the employees have or that other investors or other market participants have. And that they may have slightly different lockup periods, but when eventually the thing goes on the market and it becomes a liquid, the price is the price. And as long as there's a liquid market for it, you can sell it and get money, pay your long-term capital gains tax on it, and move to a project. So there are many people that will go from starting employment in a Web3 company to having a liquidity event in somewhere between 6 months and 3 years. Where if you look at the traditional Web2 companies, that will oftentimes happen somewhere between 3 years to 10 years, maybe never. Right. And the other thing is that with the tokens, with stock, it's 0-1. Like if the company doesn't hit its liquidation preference, all the money goes to the preferred, the common is worth 0. Sorry, all of the employees that had ISOs that were going to convert to common, but our company was unfortunately not as successful as we hoped. We had to sell it for a price that wasn't that great, and there's no money for you. But in the token world, even if the token doesn't have the amazing, price per token that you hope for, it will have some value and you're going to be able to sell it for that value. So it's not as 0-1, like win or lose, like with stock. With tokens, there's a broad spectrum at which you can sell it. And that is a much more employee favorable mechanism. And for people who understand this, one of the reasons why like all the people at Google and Amazon and Facebook, why everyone wants to move into Web3, a big reason for it is because token compensation is more employee friendly. And as people understand that, of course, people want to do things that are good for them.
So I guess the sort of obvious question is, if it's so good for employees, is it bad for the organizations? Because you might have a bunch of like post-economic engineers who are all worth 8 figures who are either going to, jump to the next protocol or they're going to go live in Puerto Rico for the rest of their lives. Like, how does this kind of play out for companies?
Well, I think that it's a really big world. There's a lot of people in the world. So there are going to be people who just get really lucky with their careers and they join the right project at the right time. And, they're able to sell their tokens and get liquid on them and have a 7-8 figure kind of net worth. And there will be some chunk of those people who move to Puerto Rico or Portugal or Singapore or someplace that has favorable tax policies on crypto assets and, relax for the rest of their lives or for many years. And, those people will exit the labor market and, other people will upskill, reskill, learn new things, and they'll move into the market. So I think over time, there's plenty of room for new people to enter the Web3 market. And I think for these crypto wealthy people, I think like most wealthy people, they'll stop working, at least on a labor-based model where they trade their time for a salary. Like if you don't need to do that, you won't. Like the only people who do that are people who need to, right? So like the moment that you're wealthy enough that you don't really need to be employed, you're just not going to be employed. That's like actually one of the great things about Web3, which is that it democratizes to some extent who can make significant life-changing money through employment. You know, like when you look in the normal tech economy, there are these stories of like a few of those people at Google or some of those people at Facebook or, you know, the early people at Robinhood or whatever who, you know, after the exit event, you know, they had a 10 or $12 million take on that. And that was really great. That's actually not most tech workers, right? Like most tech workers don't have, you have to be really early in a company and that company has to be really successful. There's like so many things that need to come in place for you to make real money in the tech economy, where in Web3, there are a lot of things that need to come in place, but the threshold is lower and the money is spread out more. It's not, I don't want to say the money is spread out democratically because of course the venture funds still own lots of token rights in most of these companies. So the venture funds are making money like they always make money. The executives are making money like they always make money, but the employee base by and large is getting a larger share of the pie than they ever have before. And that's like one of the things I think is really appealing about the category.
It would actually be really interesting to understand like what the essentially cap table looks like for some of these organizations versus a typical venture-backed company, because we're still living in the same like frameworks of capitalism and we're still like the same participants. It's just like a slightly new modality where you'd sort of assume that like a similar amount would go to the venture capitalists or perhaps more because they're essentially taking common versus preferred stock. The founders have the exact same incentives. Maybe there's like an ethos of sharing the wealth more. And in fact, because community members are participants, you might even get further dilution. And there's really like no, at least in my understanding, besides novelty, like reason why these companies should have higher expected outcomes with like lower distribution versus typical technology businesses. So it's interesting to think about that. And maybe I'm getting like too intellectual on this, but like why in a somewhat efficient world that we live in, why would it be that employees could have a better economic outcome on average in Web3 versus Web2?
Yeah, I understand your question, and I won't pretend to be an absolute expert on this topic. This is something I need to study a little bit more, but I'll give you a couple things that you can Google to educate yourself a little bit more on it. So one is just the concept of tokenomics. And tokenomics, it talks about the distribution of tokens across who are the different owners of these tokens. And there's a general sort of theory that as you have broader distribution of those tokens, you get more people participating in the ecosystem. And as you have more people participating in the ecosystem, it will drive up the market cap of that token over time. So there's a VC firm that's really active in this space. It's called Electric Capital. And there's a guy who's a partner there. His name is Elliott Garlock. And he did a podcast where he actually talks about the exact topic you're talking about, Phil, where he talks about how the VC firms take much smaller percentages of the Web3 companies they invest in relative to the Web2 companies. And the reason for that is they don't want to disrupt the token economics of the project. Because if outside people see that this thing is closely held by 3 different venture capital firms, the people will say, well, that's not really a project that I want to participate in. That's not a project that I want to buy into. That's not one that I want to recommend my friends go into. And you lose the virality of it. So one of the cool things about Web3 is that it aligns incentives in such a way. So you want to align the incentives in such a way that all the normal people are incentivized to participate in it and bring more people into it. So the VC firms actually create caps on how much of the token rights they want in any one project. Because if they invest in too much, it'll basically kill the project. So one of the things that you can take a look at is the other thing that's been happening in the VC ecosystem is they're much more collaborative, at least for right now. And this is often true for emerging industries. You know, when things are very nascent, what the distinction between a collaborator and a competitor is much less clear. Like Coke and Pepsi, obviously those are enemies. And if Billy buys a Coke, it definitely means he's not buying a Pepsi. And so those are almost like pure competition because that's an extremely mature market that's been around a long time. But like with Web3, the line between collaboration and competition is a lot more unclear. And so what you'll oftentimes find is that the VC firms are much more collaborative with one another and are sharing deals with one another. And they're all trying to invest in everything rather than them trying to sort of find the absolute best deal and buy as much of it as they possibly can. And that's like one dynamic that's a little bit different in Web3.
Yeah. What's also sort of interesting is that, particularly since these coins aren't regulated by the SEC, you can essentially manipulate the market, right? And to a large extent, the same tactics that worked in the 1920s for the stock market could work in this as well. And because of the reflexive nature of what goes up and what goes down, collaboration makes a lot more sense. And maybe that's me being like really cynical. And, you know, most people in Web3 are like, hey, we're all doing this stuff together, like let's create, etc. But I think that like these rational capital allocators of like the Yale endowment, they might think a little bit differently and disguise it.
I think what you're saying is totally right. You know, if you go back to the late 1800s, early 1900s of US history, you know, Vanderbilt wasn't the only guy that had a railroad company. You know, there were all kinds of companies that were laying railroad tracks down. You know, Henry Ford, you know, wasn't the only person that started an automobile company. There were hundreds of automobile companies. You know, most of them failed and some of them became, you know, outrageous successes. And during that time, there was an enormous amount of speculation, greed, and insider trading between like all these different like robber baron guys. And, you know, I think you'd be really naive to pretend that that some analog of that isn't continuing to happen today. The thing that's even more wild about it today is that, you know, first of all, the transactions are all in the blockchain. So if you know how to use Etherscan, you know, you can just go in and see like you can just literally see these transactions taking place. And honestly, like there's a major influencer community. So you can just go on YouTube and like a lot of these kind of like pump and dump and insider trading like schemes, you know, are like just broadly broadcast in YouTube channels, Discord channels, tweet threads, etc. And it's just all happening out in the open. I do think that regulation is coming on this. You know, I think just like in the late 1800s, early 1900s, you know, there was a lot of scam and a lot of theft that was taking place, but simultaneously there was a lot of value being created also. Both of those things are happening simultaneously. And so for me, at least the way that I look at it is I definitely think that your cynical perception has truth to it. And there's definitely bad actors in this space doing things like that. But if you look at the broader context over a 15-year time scale, they're also like rebuilding the infrastructure for how the internet works. And for as much of all the scams and theft that's taking place, the aggregate value that gets created for society is going to be much greater. And whichever entrepreneurs and companies are really doing it in the legit stand-up way, over the long run, you know, they're going to capture an enormous amount of value and create a lot of value for whoever is participating in it.
Yeah, that's awesome. Let's I feel like my natural curiosity and your knowledge has gotten us a little bit off topic. Let's switch gears back to recruiting. Do you mind talking through like how are you finding talent in what is, you know, what are the most white hot talent markets in every industry, let alone Web3 that's like way too big for its britches sort of thing. Like, how are you finding people? How are you getting them through the funnel? Can you just talk about kind of the work that you're doing?
Yeah, I think that, I think like if you look at the standard tech recruiting mix, you know, generally like the standard mix is a third, a third, a third. A third is referral, a third is inbound sourcing, inbound applicant generation and review, and a third outbound, you know, going out and sourcing people. And I would say that those ratios are still broadly applicable to Web3. You know, Web3, you know, there is a little bit more of a referral culture in Web3 because the community is still really small. And because the community is really small, the community is a little bit more, it's more tightly connected. So there's definitely a lot of referral hiring that I still see happening in the companies that I work with. And that's definitely a very real thing. The other thing that's a little different about Web3 is on the inbound channel.
Elliott, sorry, are you guys doing anything to influence referrals? Are you using tools? Are you doing incentives? Anything interesting there?
We're not really doing anything particularly fancy there right now. It's just more, in the all team meeting, hey, we're looking to capture referrals. Do any people have any ideas? And then from there, just like follow up in one-on-one phone calls, Slacks, emails, and just sort of solicit people one-to-one. In small companies, people are much more connected to one another in a small company, and you don't really need to get clever with incentives or with tools when you're dealing with a 30, 40, 50 person team. I think like once you get into a bigger organization, I think incentives and tooling and process become more important. But when you're small, everyone is just much more connected and much more mission driven, and it's a lot easier to get people involved on that. The other thing that's a little different about Web3 is there's more of this concept of proof of work. So kind of in Web2, it's like, if you have an undergrad from Harvard in computer science, and then you like went to MIT and got a PhD in machine learning and then worked at Google for 4 years in their AI team, and then you apply to Facebook's AI team, they're like, hire that woman, right? There's really not very much that happens because it's very pedigree and sort of optics driven. In Web3, because so much of the work is built using open source software, and because so much of the work is done in public anyway, for actually a lot of the roles, rather than looking at people's resumes or looking at their educations or looking at their LinkedIn profiles, there's much more of a focus on looking at people's actual work that's in the public domain. So this is true for engineers. This is true for product managers, for product designers. It's even true for marketers, for business development people. So a lot of times when people are going even through the interview screen, like the request will be, well, I would like to see some representative work from this person demonstrating that they actually know something about the space. And actually what you'll find is that the really good candidates always have it. They have a blog that they've been writing. They have a YouTube channel that they've been cultivating with a YouTube following. They run their own Discord channel, or they have like a GitHub repo just filled with code that they've pushed out. And so the thing that I kind of like about Web3 is that there is a bit more of a real meritocracy where people, even if they don't have like all the fancy education and signals that are very traditionally looked at in Web2, the Web3 founders and Web3 entrepreneurs, they don't care about that as much as in Web2. And they're really much more focused on the substance. And the thing that's cool is that if you really do have an interest in the industry and you get involved in it and you build in public, your ability to get a job, you will not be limited by whatever your education or previous employment is if your work is really good. And that's one of the things I really like about the inbound channel for Web3, because like if you work at like back when I used to work in like big traditional companies, you'd have this inbound funnel and you'd have like all these candidates, and you'd just be like reading through all these resume reviews. But in the Web3 world, you'll get these inbound candidates and they'll actually show you a portfolio with links. Here's like all the work that I did, right? And then you can start clicking through all that stuff and you're like really starting to get to know what the person's able to do. And it opens up access to people that, wouldn't be able to get access in the more traditional tech economy. And that's one thing I like about the inbound channel that I think is really cool. And it's one of the things I like about the Web3 people, which is they're a bit more open-minded and they think about talent in a much more evidentiary way versus like a signaling way, which I think is very cool. And this is like a thing like, diversity, equity, inclusion has been a major topic in talent circles for many, many years. And I think like this is an area where I think Web3, does a really good job because it is a much more of a merit-based hiring process than traditional tech companies, which is pretty cool.
And do you find that these teams end up being more diverse from like a gender and race perspective?
Not really. From a gender and race perspective, I would say that they have the same type of representation that you would see in a traditional tech economy. They might even be more male dominated than other things. But where you do see more diversity is you see more diversity in language, in country of origin, in culture, in education, in sort of other markers that are not race or gender driven. And these Web3 companies are much more global. So in the US tech market, everyone always talks about things with a very American-centric view for how to think about these topics. But the Web3 companies are much more global. And the way in which people think about these topics globally is different than sort of the narrow American lens. But no, I don't really think that the Web3 companies are doing anything remarkably different than on those dimensions in America relative to like the standard US economy.
Okay. So it sounds like inbound channels are slightly different in what you're looking for. And there's sort of this ability of someone to catch up, essentially. Like if the person that went to Harvard, MIT, Google, Facebook, they kind of had to have their act together when they're like 14 to go on that path. And
right.
Whereas somebody who maybe is like 25, talented person and spends 2 years like learning, I don't know, how to build a blockchain or something like that, and has an interest in GitHub, they can get hired. I think that's actually probably true in Web 2 as well now, where especially like the demand for engineering talent is so high that if you've built a bunch of stuff, you worked on open source, et cetera, like you're more likely to get in there. Maybe not for the FANG companies, because they're probably still more like pedigree driven, but certainly for like growth stage companies, I think they're going to take a shot on you. And that's why something like Lambda School and things like that have been successful.
I think that's right. I think that this proof of work is a broader theme that's been going on in the economy in general. But I definitely, in just my like observation, I think Web3 is driving on it a lot harder. And if you look at their teams, the mix of teams that come from a broader educational and professional backgrounds, like I observe it a lot more than I did. It
makes sense.
Yeah,
it makes sense. It's so novel. And also, like, I think a lot of the people that were in this and sort of are still the backbone, they're sort of the crazy person that left Facebook and has that rebel streak in them of like, I don't believe in sort of these traditional hierarchies.
Exactly.
On the sourcing front, what are you doing there, that third?
Yeah, so I mean, LinkedIn is still a great sourcing tool, and LinkedIn still works for Web3. But I would say that there's also a lot more activity that happens on the crypto dominant social platforms. So, Twitter and Discord and Telegram are sort of the three social platforms where there's a lot of crypto activity. And, there is a lot of examples of people who, build in public on Twitter as an example. And then they get discovered by recruiters or by hiring managers on Twitter, and will get offered employment like straight off Twitter. People will auction themselves off Twitter. They'll say, "Hey, I'm at this thing and I'm about to leave. So if anyone's interested, like let me know." And like a lot of people, one of the things I've noticed is people who are very active on Twitter are generally not active at all on LinkedIn or don't even really have a LinkedIn account. So one of the things I would say is, for proprietary sourcing in Web3, you definitely need a recruiter who's like really dialed in to these communities and like monitoring them, paying attention to them. And then like when like these things pop, they happen really fast, so that means you have to be constantly monitoring it. So what it means is it starts to change like what the recruiter is. Because it used to be like a really good recruiter was someone who had, really strong Boolean search abilities and was able to like, go onto a search, find the key things and just like do it. To be a really good Web3 recruiter, you actually have to be interested in Web3. You have to be interested in the actual business, the business model, like the tokenomics. You have to like really be like, there's a lot of recruiters, they work at Wayfair, or they work at Stripe, or they work at Facebook, and they don't really know anything about the business. They don't really care about it. They're not that interested in it. They could recruit for Google or they could recruit for Amazon. Like, what's the difference? And they don't take a lot of interest in the actual subject matter of what the business is. They're not particularly literate in what the business is, and they don't really even need to be successful at doing their recruiting job. But that is like not true at all in Web3, because you have to do sourcing through these communities, but to be able to effectively do it, you have to be involved in the communities. Mm-hmm. But to be involved in the communities, you have to be interested in what the communities are talking about. And what they're talking about are what's happening in the market. So recruiting becomes a little bit more of like, you're more of like a business operator who is researching the market and trying to have a good comprehensive understanding of what's going on. And then while doing that, spotting people to source for specific roles. And that's kind of the mindset for like what good Web3 recruiting looks like, which is why I think a lot of people really struggle with it, because it's a kind of different way of doing candidate discovery than what traditional tech recruiting, how it typically works.
Yeah. And I think a lot of things that you're saying are, I think, very analogous to somebody who's doing traditional tech recruiting, and maybe they should be doing more of this stuff of hanging out in the places where other people are hanging out, et cetera. What do you find are the key value props that resonate with candidates to join these companies?
So I would say that, I think compensation, I think, is always an important one that I think is under discussed. And I think people pretend it's less important than it really is, but I think compensation is a big one. And then I think like the credibility of the organization and how it's capitalized and who the team is and like what they're doing, I think is a second important one. And then I think the third is around like just being like consistent with like the Web3 ethos of, like decentralizing and having a plan to decentralize and like just basically falling into the broader sort of cultural milieu of like what this is all about. And I think as long as like you're sort of like a legit Web3 ethos business with a strong team and strong capitalization, and then you have strong market pay, and you sort of add those three things together, I think overall it's like a pretty strong offering. I mean, at the end of the day, they're still human beings. And the thing that's most important to people is, who am I going to be with all day? Who's my manager going to be? Is that manager going to treat me with respect, be fair, allow me to develop my professional skills, allow me to develop as a person? And can I be in an environment where I can be my best self? I think that's always going to be the most important thing to people. And one of the things about Web3 companies is because still a lot of them are still quite small, and because a lot of them are sort of chasing down these missions of attacking the big system and creating a new system, that's very appealing to a lot of people conceptually.
Yeah, I think that's totally right. Everything you just said and everything you just said also is super applicable to every type of recruiting. Are there any idiosyncratic things that candidates should be thinking about when they join these companies, questions that they should be asking and thinking about?
Yeah, I definitely think so. I think one thing to really understand is a lot of these companies are still pre-product market fit. And so as a candidate, if you go into a pre-market fit company, it's very important that that company identify product market fit, say somewhere in 6 to 18 months, depending on whatever the runway is. So I think one thing to really assess is, does the founder and does the leadership team of this company, are these folks that have good commercial heads on their shoulders and are going to be able to quickly experiment and find like a durable revenue model that's going to work in this company? Because like a lot of Web3 companies, they are loaded up with money and ideas, but it's very important that you can turn those ideas into real value creating business concepts. And like many of them are not going to be able to do that. And they're going to run out of money and they're not going to get refunded and then they're going to be gone. And then there are going to be some of them that are much more commercially oriented and are able to figure out how to identify a customer and how to deliver value to that customer in some way that creates a positive cash flow stream for the organization. And, that's very important. So I would say that's like one thing that I think is really important to drill into a Web3 company. And you'd be surprised, like a lot of them really don't have very good plans. And some of them have really amazing plans. And all things considered, at the very optical level of like who their investors are and like what their teams look like, they may actually look the same. But then when you drill in to really understand how they really think and how they operate, how they prioritize, how they make decisions, the companies that are more commercial and more disciplined in execution, I think are going to be a lot more successful.
Yeah. Everything old is new again, I guess.
Yeah.
That one as well, it's pretty interesting. And it's also funny because this entire conversation, I've sort of been viewing most of these businesses as making their wealth through the token, which of course is a goal. And that's essentially like building your equity value, but also they're going to be generating revenues and cash flows as well. It's not just going to be about the strength of the token, which, I'm sure that those two things correlate. And many times probably those tokens are, can get dividends and things like that from the cash flows of the business.
Right.
Give it more value. Are there any sort of last learnings, interesting things that you've come across in this space that you'd like to share?
I don't know. I think you asked a good set of questions. I feel like, it was a pretty good survey of what the space is like. What I would say is that, it's actually a really good time because, the markets have undergone a big correction. And, there was a big token, it was called Luna and UST, that just collapsed a couple of weeks ago. And that's reset prices in the crypto, across all crypto assets right now. And, most people kind of agree that we're sort of moving into a bear economy for some period of time. And so what I think that means is that a lot of the FOMO people, I think some of those people are a little bit like, oh, okay, what's going on with all this crypto stuff? Maybe this is really the beginning of the end. And so those people are, of course, not going to enter the industry. But I think for people who do enter the industry over the next couple of years, I think the industry at large is going to go through a period of increased discipline, increased professionalization, an increased sensitivity to thinking about standard business metrics and just running a normal organization. But doing that in the context of these new Web3 features that are innovative for the economy. And I think for people who move into the industry and work in it over the next couple of years, it's going to be a time where things are going to become much more professionalized and much more organized. Before, when there was just so much money sloshing around, execution wasn't really valued. And so you just had a lot of companies with a lot of money, but really poor execution. But I think these next couple of years, I think the value of execution is going to go up a lot. And then I think for people that want to enter the space, I think it'll be less alien 2 years from now than it is right now. It's going to become more normal, I think.
I think you're right. And I really appreciate your perspective because it sort of made me realize that this space, it's not so foreign. There are things that are different about it. There are things that are unique because it's new, because of some of the different structures and underlying philosophies that drive the movement. And it feels like a movement. But there's so much that you can take from your traditional, Web2 recruiting, or even, you were doing sales recruiting, biotech recruiting, et cetera. I think there's a lot of good nuggets in here for entrepreneurs, for people trying to get into the space as the sort of talent driving these companies. So I just want to say thanks for sharing your knowledge.
Yeah, of course. I would also just highlight to anyone who's listening that Bitcoin and Ether, in my opinion, are very cheap right now. And,
okay. What's your price target? I want to look back on this in a year or 5 years and say, Elliott thought they'd be worth X and look at what they are.
Well, I really have no idea what the price targets on any of these will be. Kathy Wood was out a month ago saying Bitcoin was going to be $1 million a coin or whatever. I have no idea how she's forecasting that or thinking that through. I really don't know what the sort of settling value of Bitcoin or Ether is going to be. But if you just sort of do the basic technical analysis of following how it's moved over how both of these have moved over the last several years. And if you look at sort of the existing the final sort of supply of Bitcoin that still needs to come out, I think a Bitcoin at 200,000 a coin, I think is a very real possibility. Could be more. I really don't know. If I knew how to price these things, I wouldn't be running a recruiting business in this space. I'd be running a hedge fund in this space, So it's really not my area of expertise. And there are people way more informed than me on this, but my raw intuition on it is these assets are not disappearing, and the supply of them is going to get more constrained, and there are going to be more market participants that are going to come in and start investing in them. So I just think of it in a very basic microeconomics, like supply and demand curve. And I just think that it's structured in such a way that over the next several years, the supply demand curves are going to be structured in such a way that I think the prices of those two have a lot of opportunity to increase substantially. And I think those are two projects that I think have a lot of durability with big communities behind them who are true believers. And the other coins, I mean, I really don't have a perspective. I mean, some of them I think will be big and some of them will go to zero. But I think Ether and Bitcoin, I think, are quite durable and are going to be around a long, long time.
Yeah. The wonderful thing about this is that there are massive network effects to money in general.
Right.
And maybe even particular Ethereum, given the different use cases and things that you can actually build on top of it. So it seems like a good bet.
I mean, don't bet all your money, like 1% of your assets, put it in a high risk thing, plan for it to go to zero. But in the event that it doesn't, and in the event that, the economy really gets restructured around these assets, you don't want to be the person who had nothing.
Right. Yeah. It's like you're looking for the right tail sort of thing to happen, which it already has for a lot of people if you got in early enough.
Yeah.
One last question. Where can people find you? They want to track you down, connect with you online.
Oh yeah. Well, I'm a recruiter now. So LinkedIn is definitely the place to find me. I'm in it all day long. So if you send me a LinkedIn message, I will see it within probably 25 or 30 minutes. I'm also, I have a Twitter account, just my name. I'm on Telegram. It's also my name. I'm also on TikTok. So any of you are on TikTok, I am Web3 Daddy on TikTok, and I create content of my 2.5-year-old daughter saying Bitcoin to the moon.
That's
in
hilarious.
outfits.
I love it. I got to now I have to download TikTok. I don't even have it, but
my long-term plan is to try to become a dad influencer on TikTok and monetize my dad content. And that would be that's my dream job, actually.
Wow. I thought you were a millennial. You're a Gen Zer through and through.
I'm trying to stay young. I'm trying to stay current.
Awesome, Elliott. It's been great having you. Thanks so much for your time. Thanks for everybody for joining.
Great. We'll see you soon, Phil. Thanks, everybody.